It's time now for us to proceed towards our much awaited panel discussions. So the topic for our first panel discussion this morning is enhancing financial strategies for dealerships, standardization, customer experience and profitability. Now in this panel discussion you are going to have the speakers whose names will shortly come up on the stage. I will invite them one by one as we prepare for the sitting here, and they will take the discussion further. Let me begin by inviting on stage Mr. Akhilesh Kumar Roy, Executive Vice President and Country Head, Auto Loans and Inventory Finance, HDFC Bank. Sir, we welcome you. Can you please join us on the stage and take your seat? Next on stage, our next speaker will be Mr. Rajendra Kumar Sethia, Managing Director and Chief Executive Officer, SK Finance Limited. Welcome, sir. Kindly take your seat on the stage. Next, I'd like to invite Ms. Sukhvinder Kaur, Chief General Manager, Retail Loans, State Bank of India, to please join us as a member of the panel for this discussion. Ma'am, please kindly take your seat. Thank you once again for joining us here. And ladies and gentlemen, this session will be moderated by Mr. Sachin Shah, Governing Council Member and Director, Sutaria Auto Center. Mr. Shah, can I please invite you on the stage? Thank you so much for taking our time. So once again, for the benefit of the audience, the topic of the discussion in this panel is going to be enhancing financial strategies for dealerships, standardization, customer experience and profitability. For the benefit of the speakers of the panel, there will be a time counter in front of your screens. I request you to please adhere to it. And Mr. Shah, I request you to please take the session forward.
A very good morning to such an august audience at 10:45 a.m. A warm welcome from FADA to all the dignitaries on the dais. It gives me immense pleasure to moderate this panel, a panel that means finance, which is the lifeline and the spine of our business. Having said that, FADA had the dealer satisfaction survey. The results were encouraging, especially in the retail finance and especially in the CV sector. However, we saw a slip in the wholesale finance, and dealers did find some issues, when it came to transparency, ease of doing business, as well as demo car funding. So there are certain things that still hold us back. The focus today that is expected is to be practical, that will drive growth for all of us together as we sail in the same boat, and not some things that will actually slow us down. So I would like, to start this discussion by putting one of the largest pain points, and addressing the elephant in the room, where most dealers face is, their employees getting payouts directly or indirectly into their own accounts. A lot of dealers are not happy with this, as dealers have their own corporate governance policies and a lot of things that get affected when money flows directly. And a lot of banks also stress that we would like to pay directly to the consultants. Many a times dealer payouts also get out to the consultants. So this becomes a pain to dealerships because it encourages some corrupt practices that ultimately affects the overall functioning. So could I request Mr. Roy to please answer this for us?
सबसे पहले तो दिल्ली की इस ऐतिहासिक, पौराणिक, राजनैतिक, प्रजातांत्रिक केंद्र बिंदु की धरती से आप सभी लोगों को अग्रिम फेस्टिवल सीजन की अनंत शुभकामनाएं और हार्दिक अभिनंदन. Getting to the question directly and in the interest of time, as far as transparency in the entire dealer payout commission and the structure is concerned, it gives me a lot of pride in stating that we were amongst the pioneers to have started this practice of only routing entire payments only and only through the dealers, except for the cases where we have an explicit consent and we are forced to by the dealership principal to route it through the other channels. But otherwise, we 100% route it only and only through the dealership. And we encourage, I would encourage through this stage, all my other fraternity financing team that we should all look at fostering this practice, because it only builds more transparency, and it gives us a lot of leverage when it comes to making good incentive structures for the finance partners. That said, there's another thing that we've done which should be of interest to everyone, is the fact that we have completely automated the payout commission process. We call it, in our internal parlance, there's an Act 21 platform in which it is processed. So that sort of removes any scope of human error. There's no human touch in the entire processing, because the incentive structures are quite complex nowadays. So many models and so many variants and so many incentive slabs to deal with. So that eliminates any possibility of human error. And to top it all, we have provided the dealer principals with a user channel interface as well. So there is a user interface wherein the dealership can log into it, and they extensively use it to know the status of the way the Amazon delivery functions. Once you order a product, you get to know the various stages of the delivery process. Similarly, the various stages of the processing of the commission and the payouts is visible on that user platform. And finally, the traditional methods of notifying the dealerships with SMS and email alerts on the various stages of the payout process is something that is very age-old process that we continue to run with. So these are some of the things that we do in order to address the transparency part as far as the dealership payout and the commission processing is concerned.
Thanks a lot, sir, for your valuable inputs on this, and I'm sure a lot of dealers who didn't know about this will benefit from what you said. Can I now request Ms. Kaur to give her views on this?
Yeah, thank you, Sachin. So as Akhilesh has already mentioned around, there were few members from the from this group also discussing with me during the tea break. So in my bank, we have that set rate for which we have to pay to the dealer around. So that is dealer, at the times dealer only decides about it, whether it will be much more easier for us to give it directly to the dealer, the full incentive, and that they can decide upon whom to pay what. But we have been getting requests around कि हमें हमारा इतना दे दो, बाकी तुमको जिसको pay करना है कर दो. So that has been a hindrance for us to get the business around. We cannot simply, where the dealer is not he's getting his share, but down the line we have to pay to the DSAs around there. So it will be much more easier for us to give it to the dealer so that they can decide. And at times we get complaints from these DSAs also कि we don't get anything around, why should we give business to you? Because other banks are paying directly to them. So if this has to be taken, it has to be done bank-wide. Yeah.
Yes, ma'am,
Yeah.
I think the question was not about, of course DSAs are there, but they're employees of dealerships.
Yeah.
On the roles of dealerships, and in that even dealerships have corporate governance structures.
No, fine enough.
So
That's
at least we expect a transparency that if some amount is being paid, it's at least shared with dealerships. Many a times dealers complain that they realize at the end of the year when they see that that boy has bought a bike or a car, and then when they dig up they find that the dealer's money has actually gone out. So that's where it came from. Yeah.
That's what I'm just trying to say. Most of the cases we are also paying it directly to the dealers. Okay, so it's not that we are paying to DSA separately, but at times, at certain places it happens around. I think Jammu was talking to me around there. So they say two of the dealers it is happening where we are paying directly to the dealers. At other places we are paying to DSAs around. So it basically comes from the demands come from the dealer how to make the payment around. हमको तो pay करना ही है ना यार. हम जितना set pay करना है उतना तो हम pay कर रहे हैं. How it is to be, it would be much more easier for us and much more less complicated for us if we make the payment directly to the dealer. So today we are all here on this forum. I think we should make a decision around कि सब dealer को pay हो. It should be standardized across the banks. Yeah.
That's great of you, ma'am. I think that's what the crowd want to hear.
Yeah, because what happens, मैंने dealer को दे दिया. The other bank, other PSB or other bank, they are paying to DSA. So in the process, we lose the business around there because he's passing the files there. So that's the thing.
Thank you, ma'am. So your views on this, please.
No, very relevant point. So I would say we require the intent from the both side, because now the business is going to scale up for lenders and to dealer side. So there should be institutional process for the payout. So every company now have the proper digital app platform, like company like us, also we have proper CFSI system, where is every dealership have their account. So and payment always goes from our LMS system to dealership account for payout. But these all the side way are always available. By maybe you are paying with your any promotional expenses, etc. So we have to fix up by sitting onto someone platform. Like we will not entertain all these sideways to paying this type of promotional activity to your dealership sales team. It always should go to the dealers, and whatever dealer will decide. If dealer say like, yes, this amount you can pay to our sales team, that's okay. So, but yes, I really endorse this point. This process really required. But as a SK, I'm working this business for last 30 years. We never opt this practice. One thing, we never entertain any corporate agent. So what point is coming when this corporate agent you pay? So they pay the cut between, they keep some amount with them and then to pay to dealers and to sales team. So at their level, this type of hygiene to maintain, it is difficult. One entity like NBFC or to bank like madam is sitting here. So at to entity level, it is quite possible. I think we should fix this process. Yeah, thank you.
Sachin, just to add, it is important and incumbent on the entire ecosystem, which is the tripod, which is the financer, the dealerships and the OEMs, all of us to come in together and foster this practice and curb the practice of paying directly to the DSEs at least.
That's great, sir. The next question that was worrying everyone was, the interest rates. The RBI at many times reduces the repo rate, but that benefit does not immediately get passed on to dealers, and when someone has to make a first and then the dealer goes to the bank and asks that, I'm getting a lower rate from there, and then they get a reduction in the price. And many a times it's not across two-wheeler, four-wheeler, three-wheeler as well. So, how can we build an ecosystem that is more transparent and the rates, while they increase overnight, also reduce overnight? So, what would be your views on this, ma'am? Yeah.
Okay, so like in case of SBI, our rates for vehicle loans it is linked to MCLR, not with the repo rate around. So, because we were doing that fixed rate of interest, we have been doing around, I think HDFC and ICICI are also having the same thing. So our auto loan rates are linked to MCLR, and that depends on the cost of funds. So until and unless our cost of funds decreases, like MCLR, so marginal cost of fund, it decreases around, we are not able to, with EBLR, it's not linked to repo rate as such. So depending upon the cost of funds, we are able to reduce the rates. And the moment the cost of funds come down, that is immediately passed on to that. But we have been thinking about linking it to external benchmark rate, which is not there at the moment. So like immediately once the repo rate falls down or it increases, so it doesn't immediately happen around in our case. So I would definitely admit that. So, but we are thinking of moving it to repo rate changes around, like all my other loans, like education loan and home loans. They immediately get the rate reduction, but not in auto loan, because these are the fixed rate of interest around.
Even in wholesale, I mean, what we are more worried of wholesale as dealers. So.
Wholesale also, I think it is MCLR only, right? Okay.
Yes, sir, your views on this?
So, two ways of looking at it. The rates are very, very intricately linked to what Sukhinder also alluded to, is to the marginal cost of funds of the bank. And if we break it up into retail as well as wholesale, the retail rates, MCLR linked, they are already at very, very competitive rates, which we charge to the end consumer. So those rates are almost rock bottom. Below that, there's almost nothing that we make as money. The return on asset on a new car loan that we give to the end consumer is barely we make 20-25 bips. But on the wholesale part, the rates are linked to the repo for us. And wherever there is a change in the repo, the rates do get reset, but one thing that we should be cognizant of is the fact that the repo rates are reset on a quarterly rest basis, and that is a regulatory requirement. So if the rates change today, you might not experience it
Yeah.
tomorrow. Only when your quarterly, when your quarter ends, then only that reset happens. So there will be some lag. But definitely it is passed on. And for some of the dealerships, preferential, where the rates are already almost rock bottom, there also, because in any case we are the banks are obligated to pass on the repo rate if the exposure is linked to the repo rates. To that extent, it gets passed on. But there will always be some lag depending on what time, what point in time the quarterly rest is experienced by that particular dealership.
Yeah, I mean, yeah, definitely understand that, sir. But in wholesale, you know, we always see, like my question was, the increase happens overnight. I mean, why doesn't a quarter apply there?
In that case, to my mind, the increase also happens on a quarterly rest. Yeah, yeah.
Okay, fine. Your views, Mr. Sethi, on this?
No, sir, every lender have their own internal price metrics. So as we are non-banking finance company, we always borrow money from banker like SBI and you, sir. So we have our internal benchmarking. But here is would like to mention, like initial call, madam mentioned, like how can we reach to list 34 vehicles to 100? So you required both type of lenders. So banker like SBI who have, like they have their own parameters, etc. But an institution like us, like we can play a very vital role with having this risk-based price. So we have our internal price, but we can add on to taking more risk because we have two purpose. One is to right price to right customer, and to also to how we can penetrate more onto largely onto like semi-urban or rural geography. And institution like us can play very vital role to reaching to 34 to these 100 unit with support of dealerships and to lender side.
Sure.
So also this is a very interesting area. I think it's also required a very institutional way. We already built up our risk-based price model, but if we utilize in a proper manner, we can serve both the purpose.
Thank you,
One
sir.
thing that the fraternity should be aware of, larger institutions where the marginal cost of funds are lower will tend to extend lower rates of interest on wholesale funding, and that is, I would just leave it there. I would not like to compare the rates that every bank is offering, but larger institutions will definitely offer you better rates just because of the simple fact that the marginal cost of funds are very low for banks like SBI, HDFC, and all the larger institutions.
Thank you for the view, sir. My next question to Mr. Roy is, you know, how can we make, you know, ease of getting loan better for the customer? Even today, we are still entangled with a lot of documentation, a lot of paperwork, and while a few preferential customers do get, you know, their loan online, but still it's a hassle. At times, it takes days to get a loan for the customer. How can we move forward in making this more easier for a customer point of view? Because many a times we see that, you know, a CIBIL score of someone has just fallen for a 10 rupee mistake of the, you know, telephone company, and we are running around setting that right, and because of which, you know, a loan of a 1 crore car gets stuck. So, you know, what is your views on, you know, getting these things to order and making it easier for dealer and customer to get loans?
Yeah, this is the most important and the most pertinent thing for all of us, and this is something that should be of interest to the entire dealership community as well as the finances, because this is one thing which determines whether you win or lose in the marketplace, both for you all as well as for the finances, because finally it is the you are interested in selling maximum number of cars, and I'm interested in financing maximum number of cars, and that is where we win. Both of us sort of mutually win. We win together. So as far as the loans to the end consumer is concerned, this is one area which is witnessing a lot of transformation, and almost every day there is some cutting edge technology that the financiers are adopting, and we are at the forefront of all those adoption of all those cutting edge technologies, and we try to leverage it. We were the pioneers in the express car loan journeys, and I would urge each of the dealerships, almost 80-85% of the dealership networks use my express car loan platforms extensively. Your executives use it. because that is one platform where I have the ability to underwrite a customer on the fly, absolutely on the real-time basis. I just need your telephone number and a PAN card. Sitting here right from this stage, I can underwrite a customer in Wasepur, I can underwrite a customer in Mirzapur. So from this stage, right in this room, within a matter of 30 seconds at the best. So that is the capability that we have, and that only ensures that when a customer walks into a dealership, he gets the offer, at least a decision. Offer doesn't mean that he's positively, I will underwrite even a bad credit, but he will get he'll get a decision within a minute. And that is where the entire efficiency sets in. So for me, I'm able to deal with 7-8 customers. For you, you are able to sell more and more cars because you are done and dusted with one customer. I give a decision that yes, I'm funding this customer, then your executive moves on to attending the next customer. And that is where we build scale, and that is where the productivity of the dealership executive, the dealership at large, and the financer increases. And that is of maximum importance for all of us. Unfortunately, at times we miss out in the other, in our view of other things. We generally tend to ignore this, and this takes a backseat. But this should be of paramount importance for all of us together. And the moment we sort of start underwriting a customer on a real-time basis, and a lot of institutions are doing it, we'll start seeing better churn and higher productivity and higher throughputs for every dealership counter, and thereby impacting the top line as well as the bottom line.
Thank you, sir. Ms. Kaur, your views on this?
Yeah, so in SBI also, we are trying to make the process more and more digital around there. And as I told earlier also, we have 23,000 branches around there. And our subsidiary has placed around 3,000, the guys who help the customer complete the files around there. And the TAT in our case is that we have a robust underwriting engine, which is called RLMS. So the TAT, there is like within 4 to 5 hours also we have been given. As Akhilesh was also talking about that, at the dealer itself, the customer gets the in principle letter, in principle sanction letter around there. So then after that it's just a matter about completing the documents and doing this. And as per RBI's due diligence, we need to do the pre-sanction survey also of the customer. So that's the only thing around which is that lag. Instead of immediately making the payment to the dealer, those are the due diligence part which bank has to do. Otherwise, now that we are coming up with our journey in our YONO 2.0, where I think that will be a real-time sanction will happen there, because all the processes and including all the fintechs like CICs also we are including in that. So those things will definitely happen. As far as you're talking about that CIBIL, like somebody has a CIC score which is not favorable, so we have a deviation structure there also. If it is just because of some credit card or some temporary thing around there, so we have a deviation structure where one step higher they approves it and the loan goes through around there. And with Maruti, we are working on the Maruti marketplace, and the files directly from the dealer goes to the branch around there. We really don't require a person in between also. So we are as I'm telling you around, we do 40 to 50,000 cars in a month. So that's a huge number. So, but definitely there is always a scope for improvement, and we are working on the journeys around. There's another journey we are trying to work around, which is in process. The seed has come, so no income proof, which we haven't been doing as yet. But that is one of the segment where last time finance minister came up with that Gramin scorecard, something where the agriculturists, they don't have any CIC score or any regular proof of income. So using the alternate sources of calculating the income and the, so that is another side we are looking upon, and which will help increasing the numbers on this side.
And Sachin, if I may just add, the digital infrastructure that the country has produced and the India stack that all of us are very fond of, so we are leveraging all of those information which is available in the public domain, like
Yeah.
the GST information is available. So
Right.
based on the GST returns, we can underwrite any customer. The first time user for us, we've also started our taxi policy, wherein the first time taxi borrower was your normal driver who wants to become an entrepreneur and buys one Wagoner and attaches it to Uber and Ola. We are willing to fund them, and we are more than happy, and we are very aggressively looking at those. And what Sukhinder also mentioned, we also have a similar kind of a policy where there is no income policy based underwriting also.
That's great to hear, sir. Mr. Sethia, also your views on when do you think that we will get rid of signing the agreement as well? When will that get digitized? I mean, a lot of agreements today, like even with manufacturer, we are going on online signing. There are softwares now that, are certified by government also. So when do you think that we can move to doing the agreement also without person having to sign it?
No, I cover both the things. Yes. First is your credit decisioning. Like, so credit decisioning, first things come. So CIBIL is you check only the intent. So whether this customer is, what is the intent behind it is. Then to come to your BRE model. So BRE you can decide, like as madam mentioned, like what things you can do underwrite immediately. Then it comes to your deviation model. So deviation, there comes into branch in between. Like company like us, we have 650 plus branches, 8,000 field team. So that's why in the collateral funding always required physical model, especially onto vehicle finance things. And we have a 10,000 plus referral network. So these all big network with technology, you make quick decision because that is the foremost thing. Now come to your agreement signing. Like this is now, it is very normal things are coming to way. Like company like us, we raised maybe 30% onto that part. Like 30% customer we do e-signing. So that is now is very normal. So maybe into next 2 to 3 quarter, so company like us also will reach to this 100% e-signing. So then to like 200 signature एक agreement में बड़ी book. So I think we will आपका हमारे sales के बंदों का जो बस्ता जो है वो हल्का कर देंगे. Yeah.
On a lighter note, Sachin, आप लोगों को बैन कर देना चाहिए फिजिकल, बिकॉज आपका ही फोटोकॉपियर का, आपका ही सबका स्टेशनरी हम लोग यूज़ करते हैं, जो भी लोग यूज़ करते हैं, एंड दे पुट एडिशनल एक्सपेंस ऑफ ऑलमोस्ट 2 lakh rupees a year.
That's a good idea. Well, another question, that we've lately seen that, certain banks are tying up with an aggregator for funding as well. Now, while we understand that DSAs coexist from a very long time and, they are much available in the city, you know them, and they are getting you business as well. But certain aggregators who want to operate on all India basis, many times, end up corrupting our system and trying to pay, our guys out of cash, and many a times we end up losing sale also on account of that. So what would be your views on that?
No, as I just told you earlier, like I have a strong branch network, right? 23,000 around, but most of my business, almost 99% of the business directly come from the dealer around. And the subsidiary, the employees of the subsidiary, which we have kept there for manning, they are not like actually the DSS or anything around, they're just completing the files. So we don't have any intermediary, we don't have any aggregator in between around. So they are just completing the file on behalf of the customer, and they are doing that. So somebody to like overtake or take over the DSS, we don't have any system around there. It's my branch which is doing almost 1 to 2% of the sourcing, or this directly coming from the dealers through my SSL employees. So we don't have any concept, nor do we intend to have any such like
great. That's great.
aggregators, right?
Thank you. Another point that dealers are facing today is getting funding for their demo cars. While we understand that the Motor Vehicle Act and the insurance coverages for dealer to give test drives run on trade certificate, and trade certificates are exempted from registration. But while some banks and NBFCs do give, the loans for demo cars without registration, but it's still not very formalized. while we have a separate insurance, a separate number for the car, but getting a funding for dealers every time is not completely hassle-free. So what are your views on this, sir?
सर हम एक्सक्लूसिव फाइनेंसर बन सकते हैं आपकी डेमो कार के बिकॉज वी आर द लार्जेस्ट फ्रेंचाइज ऑफ यूज व्हीकल फाइनेंस कंपनी सो बट आई कंसिडर इट्स नॉट यूज्ड so we will always consider it is almost new so but all the process are their place so because you required collateral management like after disbursement you required RC etc so that process it is already there the company who are into used vehicle finance company so it is not a like anything to their any challenge so if any specific thing if you ask like what is the
No,
problem
it is for dealers. Like as a dealer, I am holding a demo car, but I am unable to get a loan on my demo car that I am running. It's not when I sell it.
oh
Yeah, so as dealers, we are not required by law to register it. Under Motor Vehicle Act, we are allowed to use it for demonstration purposes, transit and lot of other purposes. But on these cars that we actually, in the companies have, marked it as demo cars. And we have specific timeline, 6 months, 1 year to use these cars and then, sell them off. But it's difficult. Some financiers do offer loans, but a lot of them do not.
But we have a formalized and an institutionalized framework of earmarking demo car limits, both on the retail side as well as in the wholesale side. So if you want to earmark some limit of yours from the wholesale side, that is possible, and we have a curated, and we can curate it to suit your requirements to every particular dealership's requirement. Ranging from 12 months to 18 months is the tenor, and that is, so we have a very, very sort of a live and kicking model that we already have. If anybody faces any issues, we can, I'll sensitize my team to sort of reiterate this offering to the entire dealership network. But we are very much there, both on the retail side as well as the wholesale side. Whatever suits you, and we can curate it to your liking.
That's a great announcement, sir.
no, this is
yeah.
a doable product
It's a doable
so it's a doable product no problem
Thank you, sir. Your views on that? ma'am?
No, we don't have it in a policy, credit policy as yet, because I think some 5 to 10 years ago there were some frauds in this segment. So my risk and compliance was little averse to it, but we can definitely look into it because we have become more and more digital, and earlier it was a lot of manual things happening around, so when those frauds happened. So, but we can definitely look into it. At the moment, we are not doing this. But like it is a new segment, so I'll ask my DJ Motto also to look into it. We can just increase our numbers by, we can float a product around.
Great.
No issues.
That will be a great announcement,
Yeah.
ma'am, and dealers will have a lot of, wow with that statement.
With the consultancy fee, we can build it for SBI.
संजय जी हमारी एक टर्म रहेगी संजय जी हमारी
हाँ ठीक है
हमारी कंडीशन रहेगी सिर्फ कि जब आप उस गाड़ी को बेचेंगे तभी आप फाइनेंस जो है ना उस कस्टमर सा एसके से ही करवाएंगे सो दैट्स फाइन
While we are all on the same boat in this, as I started my discussion with, and it's when dealers succeed and is when financiers succeed, and when dealer fails, the financier fails. So that's how we always move forward. We have a lot of opportunities that we have, and a lot of challenges. Can I know, from each of you that what do you think that can be done differently that will move up the needle for dealer satisfaction, when it comes to finance? To start with you, sir.
So I think both the business coexist, selling the vehicle and to financing the dealer. I think we should shake hand not only onto this to getting payout, etc. Like I just mentioned, we have 650 branches, 8,000 field team. If we shake hand onto that part, how can we sell your vehicle from our branch? Now the time is there. One thing is your digital platform is there. Their side, all the lending institute they have on their branch setup, like every bank institution. So we should have some program there, like how any lending company or bank can sell your vehicle. So you can display some pamphlets, demo car, etc. So lot of business we can capture from there. This is one opportunity I always see. Second is how can we work on to customer life cycle. So because you sell the vehicle, Now the customer will come after 3 years, 4 years. We every month connect with customer by getting EMI, etc. So that loyalty program, like if someone dealer sold the vehicle and customer coming again to us for getting another loan, so we should refer that customer to first to that dealership, because source of business was first time from, if the I take the example, for example, Maruti, Hyundai, anyone, like I should refer to them. So then dealership should try to sell that vehicle. So that loyalty program with this common partnership of distribution, so these two things can help. So technology is always there, that is now to base things to how can we evolve maybe onto dealership app, etc. But I think two things can help a lot.
Those are really great insights, sir, and that's really working together. Thank you. Mr. Roy, your views on this?
So, as a financer, my view is that we should sort of transition from our transactional relationship that we have with most of the financiers, कि customer आया गाड़ी लेने के लिए मैंने finance कर दिया आपको payout मिल गया, to enriching this relationship. And how do I envisage and how do I envision that this enrichment can happen? And we have already started doing it for the last 3 or 4 quarters with select dealership networks. I will not say that I'm doing it for carte blanche for everyone. Is the fact that your car buyers are first good banks customers. Most of the car buyers, they essentially they would have a account with somebody, some large bank like us, SBI, a lot of other banks also. So if you can leverage on the consumer base that I have, that is something that you should sort of leverage more. As of now, I'm sorry to say this, but you don't leverage it to the extent that you should be. It is, I am proactively offering this service to you. I have about 85 million customer base. 8.5 crore, State Bank would have twice of this number, but 8.5 customer base, and HDFC Bank's customer base, consumer base is essentially mass affluent. सबके पास गाड़ी afford करने का हैसियत है, वैसा customer base है मेरे पास. And I have the capability, I have more than 2,000 data scientists that work for me. So I have the capability to underwrite and sort of cull out the consumers which are most likely to buy a car. And that is what, that is something that I keep on offering to dealership networks, and this is something that we can add value to. So we'll be able to tell you that this is a set of customer in Connaught Place, these are the set of 2 lakh customers who are most likely to buy a car, and I can campaign to that customer without any incremental cost to the dealership. So I campaign on my behalf and divert the traffic to the dealership, stating that because I have the capability to gauge and evaluate that this customer is most likely to buy. The propensity models, most of the financial institutions use it, but we are one of the pioneers there, and that is something that we use to a great advantage of ours, as well as sort of build traffic to the dealerships. And I can do it in Junagadh and wherever you can name it. I can just pick up a customer, my internal customer base, give you 1 lakh customers. These are the most customers who are most likely to buy a car. And I can predict the model, luxury, everything, because of I have visibility to the customer's transaction, where he spends his debit card, where his credit card spends, what does he do on the website. So all of those signals I pick up and massage, and with the AI and the ML tools that we have, we can with a great degree of predictability, we can tell you that these are the customers who are likely to buy a car. And that is how we can build throughputs to you and build your volumes, car volumes.
Well, that's a really bold statement in today's world of data analytics and AI, and I'm sure dealers should leverage this platform, and I'm sure FADA will work more closely with banks to work on this and help dealers convert more cases. Your views on this?
Yeah, so I will take what Akhilesh said forward around. So we also have that AI, ML and all the propensities which customer could buy, but I won't be able to share the data with the dealers because of DPDP Act. So that customer secrecy I have to maintain. But yeah, definitely what we can do is, the leads which we are having, we are always having this pre-approved leads which we generate around there. So we use our subsidiary to making the calls around there. So whoever is associated with particular dealers, so those customers are called. So directly I cannot share the leads with the dealers around there. So no policy, these days no policy, like at least my bank's policy doesn't permit me to do that around. And like we have already been doing that joint publicity campaigns along with the OEMs. We have been doing with Maruti is regular, Hyundai, M&M, and MG Motors also. So this festival season is coming around, and we have continuously in front of my branches around, we have district level branches around. So we have been doing, displaying the vehicles of the dealers around there, and those things we have been doing. And then he also said about the relation should not be a transactional one. Gaadi bechi khatam ho gaya. That is not the thing. And like we can add product per customer, increasing that. Like we are giving this fast tags also. Like, so to the dealers, FASTags is also being, so that the loyalty of the customer with the dealer as well as the banking institution remains there. So jointly we can do a lot. And one thing is there, like everybody all would be having around the dealer payment, the payment for the vehicle directly goes to the dealer's account. So we don't give checks anymore or drafts anymore around. So the payment is almost real time, within 4 to 5 hours of the sourcing of the file, that goes into their account. So at least the funding keeps on moving. On the other side, EDFS is also there. I won't be able to speak much about it there because I'm not dealing with that. Thank you.
Thank you, ma'am. And I think we are really bang on time today. But I thought I could take some questions, from the floor. But I think we will have time just for one question, I think. Yes.
Thanks, Sachin. So, 2 suggestions and 2 questions together. It's been years we are talking about this payout issue. So obviously sitting at your helm, everything looks greener. But sitting at our helm, there is always a problem. Some branch managers, some like HDFC always has an issue that their branches source all the business, and even if dealer gives it, it doesn't go to dealer's benefit. So as a suggestion, can we have an FADA email ID which is handled by the seniors? Whichever dealer has a problem can send you directly that this branch, I know you'll get a lot of spam mails, maybe every dealer will write it, but maybe then you'll understand, you'll not have to wait every year to come here to understand what problems we are having. So if one particular branch or a team of DST is doing something which is not retail friendly or dealer friendly, we can send you an information which you, if you think right, you can work on it. So every bank I'll request, we can send a mail by FADA if our president agrees, to everybody to have some FADA at hdfc.com for a grievance or something like it, so help to all. Second point, on the limits, obviously I don't know if you handle wholesale funding or not, even if you not, if you can pass on. Lot of times whenever the issue crops up of high inventory, and then dealers going bust because of expansion and high inventory, we get a lot of messages from you all that why did the dealer did that and all. So my request from the dealer side is, see, we are, our relationship with OEM is very, very complex. At times, even if we sign a paper, we want to sign it or not, it's very difficult. You can't understand also that. So is it not bank's duty to morally check what is the inventory, and if dealer is good enough to, when he's doing a business of 10 crore and you are giving a limit of 30 crores or 40 crores on the pressure of the OEM, is it not bank's duty also to ascertain if that business is viable or not? And if it is not, only because I get the answers that अगर हम नहीं करेंगे तो दूसरा बैंक कर देगा. ठीक है, competition is there, volumes are there, but the day dealer dies, your money also goes up because no OEM pays you back. So can't you design something where you solve it for us also?
Absolutely. If I were to answer in the interest of time, the email thing, absolutely doable. We can do it from tomorrow onwards itself. We'll create a specific email ID for and share it with FADA. That is one thing. The second part on leveraging, the way we look at it is that branches generate a business, and we feel that we are increasing your sales by generating that lead and sending that customer to you. But it is again slightly chicken and egg story, whose customer was it in the first place. But that is some linkage that is debatable. But as I said, but it's a matter of wherever there is a branch, your customer being poached by the branch, that is something which is not acceptable, and we can easily sensitize the branches, and through that email ID and that help desk, we can sort that issue. And as far as this is concerned, is HDFC Bank, I can only comment on my behalf, on the bank's behalf. We are not under no pressure, and we don't take any pressure from the OEMs in terms of utilizing your limits and piling up inventory. But in fact, we are very, very particular about only and only underwriting the dealer. We are not obligated towards the OEM to we don't even share information about the available limit with the OEMs, which a lot of other financiers do. So that is something that we are very, very particular about. And we also have very, very entrenched corporate banking relationships, but both these arms are separate. That is one of the reasons why these are separate. So my corporate banking RM who deals with the OEMs is absolutely different, and we don't have any visibility. I don't share anything with him, he doesn't share anything with me. To that extent, we at least don't do that. And we are under no obligation and neither under any sort of pressure to कि OEM के कहने से मैं आपको माल भेज दूंगा, that is something that doesn't work with HDFC Bank, and we'll be still more sensitive. We take that feedback and we'll be more sensitive and conscious about this.
Thank you, Mr. Roy. And with this, in the interest of time, I'm really sorry that there would be more questions, from the gathering, but we will, have to call this to an end. Thanks a lot to all the three of you, for candidly, answering our questions. Thank you. Thank you so much.
All the best for a great festival season ahead. And एक दो लाइन मुझे बहुत अच्छा याद आ रहा है, अभी कुछ ही देर की खामोशी है फिर कानों में शोर आएगा, कुछ ही देर की खामोशी है फिर कानों में शोर आएगा, तुम्हारा तो सिर्फ वक्त था, ऑटोमोबाइल इंडस्ट्री का दौर आएगा.
Thank you so much, gentlemen, and of course the lady on the panel for a wonderful discussion. That's a perfect start to our panel discussions. I'd like to request all of you to bear with us for a few more minutes as I'm going to call on stage Mr. Sai Giridhar, Vice President FADA, to please felicitate our speakers for the first panel. Sir, please, if you can join us on the stage. And we'll get the mementos first for Mr. Akhilesh Kumar Roy, as Mr. Giridhar joins us here to felicitate all our speakers. Round of applause, please, for all our speakers and the wonderful couplet that Mr. Roy just narrated for the industry as a whole. Good times are coming ahead. Can I request you to please bring the memento for Mr. Rajendra Kumar Sethia as well? Thank you very much, sir, for your contribution. Ms. Sukhvinder Kaur, please, can we please have the memento? Thank you, ma'am, for your sharing your expertise on the subject with us. And next, please get the memento for Mr. Sachin Shah, who wonderfully moderated this panel discussion. Well, can we please have you all for a final group photograph before we disperse and start the second? Sir, you also please for the group photograph. All of you. Thank you very much, all of you. It was wonderful to have you all with us, share your expertise, and of course, members of the audience, just in case your questions were not taken, there's always a chance to take them up at a personal level during the networking breaks. Now, we are preparing for our second